So hey everyone, as you can see, I have two indicators turned on, the Bollinger Bands and the RSI. And today, I'm going to show you why this strategy is one of the best for beginners and why it's so good at filtering out all the useless entry points. I'll show you everything for both buying and selling and when it's best to enter. But before we start this video, I want to ask you to be active under the video, like, comment, and subscribe to the YouTube channel. It really motivates me to make new videos for you. Also, be sure to write in the comments what you think about these two indicators in general. Share your thoughts and tell us about your experience trading with them. I won't waste any more time and we'll start this video. So let's open our first trade for today. It's a sell trade. Let's break down why we're trading here and open a sell position. It's all very simple, guys. Look, we have two zones here, the overbought zone and the oversold zone. We identify the overbought zone by looking at where the price is in relation to this upper red line. So this red line here indicates the overbought zone. If the price approaches the red line or is close to it, that means the market is overbought. And we confirm this with a signal from, how do we confirm this? Here we have the value 70, as you can see. If the price is above this line, as in our case, or if it approaches this line at 70, that means our market is also overbought. So we get two signals that we can open a sell trade. In other words, the market is overbought. We open a sell trade. Everything here is very simple and easy. It's incredibly simple, really. There are even special settings here so you can see that this is our overbought zone, and from there we open a sell trade. So whether it's red or not, it's already red. Everything is individual, simple and easy. So why does this strategy filter out bad entry points? It's all incredibly simple. Look, we had an example just recently. The price reached the oversold zone. Here, the price was in the oversold zone. We think that the market is oversold right now, so we can open a buy trade right at this moment. But we look at the RSI indicator and see that the price hasn't even reached the 30 zone yet. So it was somewhere around here. This is about a value of 40, which means the market wasn't actually oversold at that moment, and it wouldn't have been safe to open a trade right then because the market wasn't fully oversold yet. Yeah, of course, this isn't the best example because after that the price went up. Let me show you an even clearer example. For example, look here. The price has reached the green zone, which is the oversold zone of the Bollinger Bands. So we might think the market is oversold and we can open a buy trade. But then we look at the RSI indicator. We see that the value is still at 50, which means we're in the neutral zone. So the market isn't fully oversold yet. Yeah, again, in this situation, the price still went up. But for example, the Bollinger Band might show the market is oversold. If the RSI shows it isn't fully oversold yet, it's not a safe entry point, and you shouldn't open a trade there. So this way, we filter out bad entry points. Yeah, of course, in the two examples, we didn't actually filter out the bad entry points, but you get the idea. Alright, here, I'll also open my own sell trade. Why? Because again, the price has reached the upper zone, the Bollinger Band, which is the overbought area. And the RSI value is above 70. These are two signals that you can open a sell trade. The optimal entry point is when both of these technical signals clearly suggest that the market is currently either overbought or oversold. That's the best moment to enter a trade. Also, guys, I would strongly advise you not to use the middle line of the Bollinger Bands at all. I'll explain why in a moment, once the trade closes in profit. As you can see, the trade is successfully closed in profit. So look, here's why I don't recommend trading from the middle line at all. First of all, that's not even a strategy, unlike the one I'm showing you now. Why is that? Because we trade specifically from the overbought or oversold zones. That's the first reason. Secondly, why do I generally not recommend trading from the middle line? Because a lot of people know that the middle line of indicators, like Bollinger Bands, Keltner channels, envelopes, and other similar indicators, acts as a resistance zone. Let me show you how that looks on a chart. Here we have the price movement, here's the upper line, here's the lower line, and here's the middle line. So how is this supposed to work? Basically, the price moves toward the upper line, bounces off the upper line, goes to the middle line, and then bounces back up to the upper line again. And that's how it's supposed to move, until at some point it breaks through. But most of the time, in the Bollinger Bands indicator specifically, the middle line doesn't really work at all. So the price moves up to the upper line, then immediately goes down to the lower line without stopping, and the resistance zone at the middle line doesn't work. The price just keeps moving further. Like this, like this, like this. The middle line doesn't work, and we could even see that on a chart. So look, here we had an oversold zone, the price moved, bounced here, and then went down again. And it just kept going like that. Yes, there are times when the price stays near that middle line, but in those moments, you can never guess or predict it. So yes, there are times when the price does hold, but it doesn't bounce. It just stays in the middle, away from the overbought zone. So here, as you can see, the price bounced off the lower band, went up to the upper band, reached the middle line, and then just started hovering there. It didn't even start bouncing back toward the oversold zone. So yes, moments like this do happen, and only after that did the price break through to the lower band. Why do I not recommend trading from the middle line at all? Because when the price is hovering around the middle line, it's unclear what's going to happen. There's no indication or signal for that. That's why I strongly recommend you only trade from the overbought and oversold zones. If you see that the price is approaching the middle line, just skip that currency pair, because like I said, it's unclear how long the price will stay there, or if it will break through right away. Of course, most likely it will break through immediately, but the price can linger at the middle line, as I just showed you in the example. And you won't know how long that's going to last, or if it will even happen at all. Also guys, I'll explain to you how indicators work, the strategy, and how to open trades for selling and buying. I've explained to you why you shouldn't open trades or trade based on the middle line. You really need to understand how to trade using indicators and strategies. It's also important to set up the indicators correctly. Why? Because what I explained might not work with default settings, and you could get messy signals. That's why you need to set up the indicators correctly. It's crucial. So where can you find the right settings? I'll post them in the Telegram channel. There will be a post here about this video being released on the YouTube channel, and right below it you'll find the settings for the Bollinger indicator and RSI. You can just grab the settings and start trading with them. So there will be a post like this announcing that our video has been released. And right below it, you'll find the settings for the Bollinger indicator and RSI. And you can just take them. If you want, message Mentor William and he'll provide them for you. Just send him the link to this video and he'll send them to you. You can find the link to the Telegram channel in the pinned comment under the video or in the profile header of our YouTube channel. Go ahead and grab the settings. And right now we have a buy trade. Why? Because as you can see, the price is near the middle green line of the Bollinger Bands. So this is our oversold zone. And according to the RCI value, the price is approaching the 30 zone. That's 2 signals for 3 buy trades. And here, it signaled a buy string. And before that, it signaled sell trades. And this trade also closed in profit. So another buy trade, again because the price reached the lower zone of the Bollinger Bands, right here in the green zone, which is our oversold area. And the RSI indicator is showing a value below 30. So we have 2 signals here to open a buy trade. And this trade also closes in profit. Guys, just a reminder, you can get the settings in our Telegram channel. The link to it is in the pinned comment below the video or in the profile header of our YouTube channel. Go ahead, grab the settings, and if you can't find them, message Mentor William. He'll provide them for you. Alright, let's open the last trade for today, the sell trade. The price has reached the red line of the Bollinger Bands. This means the market is currently overbought and the RSI indicator value is above 70. So the market is extremely overbought and it's a good spot to open a sell trade. And this trade also closes successfully in profit. The last one for today. So guys, as you can see, throughout today's video, I showed you exactly how to trade using this strategy, which signals to use to open, sell, and buy trades, and which situations you should skip when trading with this strategy. Basically, I showed you everything. Let me show you the market settings again. We're using Japanese candlesticks, 30 seconds each. You can also use 15-second candlesticks. That's all. Remember, you can get the settings in the Telegram channel. Comment below, what do you think of this strategy? Did you find it interesting to watch? If yes, let me know why you found it interesting. And if you try out this strategy, please share your feedback about it. How many pros and cons did you find? I'd really love to read your thoughts. That's all for now. Thank you all for watching. Goodbye everyone.